Hello everyone and welcome to Rajput Jain and Associate. In this video we will be discussing about input tax credit. So starting with the meaning of input tax credit. Input tax means the amount of tax which has been paid by the taxpayer at the time of purchasing the inputs for their business. So input tax credit means claiming the credit of the GST which they have already paid on purchase of goods and has been used for the furtherance of their business. So the mechanism of input tax credit is the backbone of GST and is one of the most important reasons for the introduction of GST. The GST law provides the benefit of ITC and the same is available not only on the goods and services but also on the capital goods. The amount of ITC will be credited to the electronic credit ledger of the taxpayer and can be used when making payment of the outward tax liability. So having discussed about the meaning of ITC, we will now be discussing the eligibility for availing the input tax credit. So every registered person can take the credit of the input tax only when the following conditions are fulfilled. First of all, the goods and services must be used or intended to be used in the course or in furtherance of business. No credit would be available in respect of inputs which are used for outward supplies of exempted goods or services. The taxpayer must be in possession of tax invoice or debit note. The taxpayer must have actually received the goods and services. The supplier must have deposited the tax with the government. The supplier must have filed the valid return within the due date. And no ITC can be claimed on the tax component on which the depreciation has been claimed by the taxpayer. So having discussed about the meaning and eligibility for claiming ITC, we will now be discussing the mechanism of ITC. So let's take an example and suppose that there is a seller Mr. A and there is a buyer Mr. B. So what is happening is that Mr. B is buying certain goods from Mr. A and paying GST on the same. So now Mr. B would be eligible to claim the amount of credit or amount of GST which they have paid on the purchases made from Mr. A. For this, Mr. A would be required to furnish his sales and tax invoices in GSTR 1. Once they file the GSTR 1, Mr. B would be able to take the input tax credit and the said amount of input tax will be reflected in GSTR 2A of Mr. B. So once the amount is reflected in GSTR 2A, Mr. B can file their return and adjust the amount of ITC against their output tax liability. Now we will be discussing about the time limit for availing the input tax credit. So the due date for filing the return every month is 20 days from the end of the respective month. So for example, if someone makes a sales in the month of September, they would be required to file their return which is GSTR 3B latest by 20th of October. The said amount of ITC will be available for a period of 180 days from the date of issuance of invoice and the recipient is required to claim the ITC within this period only. Next we come to the apportionment of input tax credit. First of all, where the goods are used partly for business purpose and partly for other purpose, ITC can be claimed only in respect of goods which have been used for business purpose only. Secondly, where the goods or services are used partly for effecting taxable supplies including zero rated supply and partly for exempted supplies, then the ITC will be available only for the supplies which are attributable to the purpose of business only. So here exempted supplies constitutes the supply on which the recipient is liable to pay tax on reverse charge mechanism or some transactions in the security market or any sale of land or any sale of building which is subject to any certain conditions, any nil rated supplies or non-taxable supplies. So let's come to the availability of credit in special circumstances. Persons already engaged in business before GST who now requires mandatory registration. When people applies for voluntary registration, shifting from composition scheme to regular scheme, when an exempt supply becomes a taxable supply, 1 year limitation period of invoice for availing ITC, ITC in case of change in the constitution of registered person, when a person under a regular scheme changes to composition scheme or the taxable supplies have now been exempted, or the conversion of capital goods from non-business to business assets. So the input tax credit under GST would be allowed in the following manner. So as we know that there are three components of GST, that is CGST, SGST and IGST. So the credit of CGST can be allowed firstly for the payment of CGST and the balance can be utilized for the payment of IGST. However, it is to be noted that the credit of CGST cannot be made or offset against SGST. Second point is the credit of SGST or UTGST. So the credit of SGST or UTGST can be allowed firstly for the payment of SGST and UTGST itself, and the balance can be utilized for the payment of IGST only. This means that this credit cannot be utilized against the payment of CGST. And lastly, we have the credit of IGST, which can be allowed firstly for the payment of IGST, and then the same can be used for the payment of CGST and SGST in any ratio. So guys, this was all about input tax credit. In case you want to know more about input tax credit, please contact Rajput Jain and Associates. Thank you.